It's Sunday the 10th of February 2019. I'm going to do a quick run through on some of the ASX gold charts and the fundamentals of some of the stocks following the recent round of quarterly reports in January. First one, Northern Star. Don't hold Northern Star. Haven't held it for quite some time. I was warning about this. The last video I did, I think in probably in late December, I was warning about the potential of sort of a disappointing couple of quarterlies here. They're doing that turnaround of Pogo, the asset they bought in Alaska. They came out with that quarterly result here, had a bit of a steep fall there on high volume, sort of just further showing potential weakness in the stock and rising costs at some of its other assets. I think that the Pogo mine was sort of the costs were above $1,600 Australian. So it's a pretty high cost turnaround at the moment. Maybe they can turn it around, maybe they can't, but I just think there's a significant risk in the stock at the moment, and it probably doesn't warrant the valuations it's trading at. So I've sort of got it on it as an avoid at the moment until I can see some sort of fundamental shift there. Evolution's done pretty well. I haven't actually read their latest quarterly, but I'm not in the stock either. I've always said it's probably the last 6 months. I thought it was the best at looking of those charts of the Northern Star, Evolution, St. Barbara, Regis, Saracen group. I thought the Evolution probably had the most value in it, and that's proven to be true. In sort of when it dipped down to this level in September, October, it's had another nice sort of 40 or 50% move from there, so it's done quite well. Again, not sure if it's worth buying here. Sort of still downside risks. I think they're but they're a very low cost producer, and they're making tremendous cash flow at the moment at these gold prices above $1,800 Australian. Regis, same thing. It's had a pretty good move from the lows there, that sort of 40 or 50% move. Now sort of looking toppy at these previous highs. I'm not sure where the growth's coming from necessarily. They do have their McPhillamys mine in New South Wales, but had a few troubles developing that and getting it started on development, I guess. And it's just sort of been in a bit of a holding pattern for a while. So, they're a very quality company, but I'm hesitant about holding any of these stocks before, I think the cost bases are rising slightly, and they're doing well, but you're really relying on the gold price. And I don't want to necessarily be relying on the Australian dollar gold price, even though I think it's looking pretty positive. I'd rather play it in some of the other stocks where I think there's more upside at a company level. Saracen's obviously been an extremely good performer, up 50% again or more. I think this is probably the most overvalued of some of these mid caps. Fully valued, trading at I think above a maybe $2.5 billion market cap when it got above $3, almost up to $3.50 last week or this week. So I'm a bit. I haven't held Saracen for a long time, past sort of $2. I think they're going to look to take someone over to make themselves go into that next tier of miners. They're a prime candidate, I think, for a merger or taking over a mid cap, another sort of merging with a mid cap to create sort of another company in the Northern Star scale. That's just a personal view I've had for a while. Perseus, I was pretty disappointed with their quarterly. Pretty high costs. Didn't have a lot of cash burn. So I thought it was in a bit of a recovery mode. It still looks relatively cheap here, but it doesn't have that tailwind of Australian dollar cost base. Obviously, it still benefits if it's selling in Australian dollars. Eventually, those profits come into Australian dollars, so it should still benefit. But this chart's not great, and it's just I sold a few after the quarterly when I read it. Didn't really like it much, but I don't think there's considerable downside here. Resolute's another one. Don't really know what to make of it at the moment, and I think that's the case for a lot of people. High cash burn, struggling. Last couple of weeks it's been struggling, and it's turned over. The quarterly itself it was a pretty good number on the headline production result. Costs were okay, but they're still burning a lot of cash, and their Australian asset at Ravenswood is not doing that well as well. So it's hard to make out what the true story is there. It does look positive in terms of the Syama upgrade, and in the next 6 months that should be ramping up. So if that delivers on costs, this company can be generate extremely good free cash flow, which is what occurred in this period in 2016 in particular. They were pumping out free cash flow, and saw that massive move. So I'm aware of that can happen, but still downside risks here. I took a small position in sort of the mid 110s here, but potentially if it goes lower, I might be looking to add there. I'm not sure if there's but it's kind of hard to get the right feel for it, and they're drawing more debt, I think, or have the opportunity to draw more debt. So want to see that cash burn kind of stop and the cash flow come in from the Syama underground. Dacian looks pretty good. It's one of my larger holdings. Had their quarterly result come out. I've been posting these on Hot Copper, these little production forecast sheet that I've started doing. I think these are the actual numbers, but I think I targeted around sort of 37,000. So I got pretty close to the actual number, which was 37, almost 38,000 ounces. I've had another look at their feasibility study forecasts, and there's a real ramp up in grade at the first quarter or two from Allison's, which is the high grade underground area. It's got a grade above almost 10 grams a ton. So if they can get some of that ore into the mix here, which they're scheduled to do in March quarter and in June quarter, you could see a real ramp up in the grade. And I think if the tons come with it as well, as they appear to be with 3 declines operating, this can really hit the production forecast. I don't think they'll quite get to 180,000 ounces because I think just too much has to go right. This is kind of I guess a fairly optimistic forecast here, except on the underground grade is a bit of an unknown, and the underground tonnages. But I think from the open pit and the open pit sort of underperforming a little bit, doesn't quite have the grade yet. They're saying it's coming, but I wouldn't be surprised if the grade came in lower than 1.1 grams in March. And I think maybe they're reaching kind of the limits of the processing plant around that 2.7 million tons per annum run rate. So that's my forecast there. So I think they'll still get there. And if they're pumping out 48,000 ounces, I expect their costs will be very attractive to the market, and they're going to re-rate again. That's what the stock's probably going to struggle above, going to sort of stagnate around this 260 level, I think, unless the gold price goes nuts. But I think if they hit 50,000 ounces or around that for the next 2 quarters, you're going to see this above $3. And I think it's one of the only companies that is really a takeover candidate for some of those cashed up, fully valued others like St. Barbara or Saracen. Gold Road has had a very good move the last couple of weeks. That's another one I've really been buying in the last probably 6 to 9 months in that sort of low to mid 60s area. Looked extremely good value. Had a nice breakout here, some big changes in stock. I think they're due for production around April, first gold there. So I think the stock can easily be sort of moved back toward that all-time high around 85 cents and potentially go higher again. But there's good upside in the stock still, just a huge reserve base. I don't know if they're a takeover candidate as such. Goldfields does have a blocking stake there. I think Goldfields would be the only real company who are going to take them out. But again, if the startup goes well, this looks like a really nice chart here as well. Just looking at it, like you're seeing that sort of churn, but had that breakout above the 200-day moving average there. Double bottom breakout above this sort of 74 cents level, consolidating here for the last 6 or 7 trading days. I think it goes to 85. So I'm pretty big on Gold Road at the moment. Some of the others in the smaller gold producer, Emelius has had a pretty good move the last 6 weeks. Jumped back into it. Hadn't been in Emelius since probably around this time last year. It's sort of selling between this 55 and 65. I think I sold most of my position. Jumped back in at 51 a couple of weeks ago, and it's had a nice little move. And I think everything looks quite positive there. Gradually extending their mine life through their sort of bolt-on acquisitions. They've finalised the takeover of Explorum, So I think stock looks pretty positive. Some good drill results recently. So I'm pretty happy with their performance, and I think that's probably a good one to be in at the moment. Now with sort of the growth questions that were sort of have been around the stock for a while, I think there's more positive moves there. Silver Lake struggling a little bit. Last quarterly was a bit high cost again. They're finalizing that merger with Dore. I like the production profile, I think, and the cash flow ability of this company in the next year. If that merger with Dore goes ahead, they're going to be pumping out really good cash flow, because I think some of their they've been investing quite a lot in development of some of their open pits, and I think they have really good cash flow, and Dore is in kind of a sweet spot in their production life cycle as well. So I think you could see very good cash flow in the market marking up the stock just on that. Still fairly short mine life, but cash flow in the short term will probably override those mine life concerns. I mean, was talking about this sort of last year. I was buying a lot in this these high 30s, low 40s, and then it had that extremely good move up into the 60s. But since then, sort of stagnating on a few high cost quarters and a bit more development. So I think I like that stock. Maybe in another 3 to 6 months, I'd think about buying it. Short term, it's probably going to sort of stagnate. The next sort of lower down tier, kind of see that I'm moving down the levels here of companies that are producers, small producers, and then these something a bit more speculative. Echo is a company I've been buying into. I was in these mid 20s, had that really steep fall. Sort of hanging on to a holding that's under significant pressure, and then gradually has been rising these last few weeks, and had a real kind of nice looking sort of cup and handle chart here, and breaking out almost above this kind of 19-20 cent level on good volume. So nice rising volume there. I think the stock can really run here. They've got an updated BFS probably due in the next couple of months. Northern Star holding more than 20% of the stock. I think it still gets taken over by Northern Star. I think I've talked about this one before, but the story is pretty clear that why Northern Star wants it, and they got that leverage to an Australian dollar gold price that I like. So that's another one I'm still holding a decent stake in, expecting it to get taken out. Capricorn Metals is one that I've been in and out of over the last sort of 18 months, mainly out of. I was looking for a takeover here, got burnt, but kept holding the stock. I think it's still enough corporate interest there, and their project is pretty attractive. They've just announced a share purchase plan, but I think there probably is a high chance of some sort of corporate interest there in the next quarter, in the next 2 to 3 months as well. So I intend on participating in that share purchase plan, and I'm expecting something to happen there. Just purely based on the gold price, these guys are going to be pumping out cash if their costs are coming in at $1,000 an ounce and the gold price of $1,850. They're a really good takeover candidate for a sort of $60 million market cap at the moment. Even if someone paid $100 million for them, they're a pretty good candidate with 10-year mine life. So that's all the sort of the Australian names. More speculative stuff. West African Resources, again, been holding that for a long time now. Talked about it a number of times in the video, so I won't go over again. Expecting their update of feasibility study in the next 6 weeks. I think the numbers are going to be pretty good. It still looks like the best development project on the ASX to me. Obviously, there's been issues with just the timing, I guess, and I think there's worries about security in Burkina Faso as well. But the quality of the project is second to none on the ASX and worldwide. Really, there's not many development projects of this scale and quality, low cost. So I think they're going to get taken out as well. Even if they don't, I don't mind. If they take this thing to production, costs of sort of US $500, $600 an ounce in the first couple of years, it's going to be pumping up free cash. The other one, final sort of ultra speculative stock, is OKU. Just been in that downtrend, been buying in these mid 20s, and I think they're just starting to release drill results. Wouldn't surprise me if we saw some more drill results this week. Very, very illiquid, obviously. So I'm not telling anyone to buy this, but you can move the stock price. If it's 10 grand, might move the stock price 20% here. It's very liquid, tightly held by some big institutional shareholders and Resolute as well, holding about 10%. So hard to buy into, but I think their drill results, when they come, I think there's an increasing probability they're going to hit something pretty significant here that changes the economics of their project, or increases resources and makes them of a scale that they can build a mine. So that's a real sort of stab in the dark stock, but you got to have sort of those real firecracker plays in your portfolio sometimes, and I think OKLO's in that category. So that's about everything that I'm following and having an interest in. Not holding all of those stocks, but just keeping an interest on my watch list. And I'll do an update again in probably another month or so on some of those.